In today's training, I'm going to be walking you through how to use the Voyant software to demonstrate the value of taking planned withdrawals from a whole of life policy during a major loss event, and then comparing and contrasting that against not taking those withdrawals so that you can show the value of that strategy to your client. I'm going to start by creating a plan where we show not taking those withdrawals and how that might affect your client. I'm going to drop in a major loss event to this client's cash flow. To do that, I'm going to go down to my plan settings and go to this major loss section here. And in here, you can create whichever major loss scenario that you'd like to model. This is all customizable to however you would like to model the major loss event. So you can set the default age of the major loss event and the number of years that you would like to model. Let's say in this example, I want to show 2 years of major loss, and I want to do a negative 10% drop in the first year and negative 8% in the second year. And I'll click done to save that. And then I'm going to go to my timeline and just drop that into the plan by going to my plus button here, going to events, and you'll see these special events down here. Special events will actually cause an action to occur in the plan. So I'm going to select that major loss one that we just created, and you'll notice it defaults to age 65, which is what we created in the plan settings. So I'm going to click done to save, and you'll see this major loss event is automatically created on your timeline, and you can now see that that retirement goal we had in the plan has dropped from 100 to now 76%. And that's because we are now no longer growing those assets as we expected to. So if we go now to our dashboard, you can see it's now no longer all blue. We're now seeing some shortfall later in the plan. And if we click turn on our details, we can see what assets we're using in the early years. We're using some taxable accounts, and then moving into Social Security and qualified accounts. And if we go to our year view, we can review what those are growing by. So we can see net growth drop rates, and then we can see the fixed growth drop rates in the first year and in the second. Now I want to create a alternative scenario so we can compare it to what it would be like if they just used their assets as is versus taking a line of credit from the whole of life cash value that they have available in this plan. So I'm going to create a what if plan, and I'm going to name this Take Withdrawals from Whole of Life. And we're going to create this plan, and you'll now see in the top right corner we're in the Take Withdrawals from Whole of Life, so we can switch back and forth between these plans at any point. And I'm going to go down to my insurance policy that I have in here. And you'll see I have the current cash value already entered. So what I'm going to do is link a debt or link a line of credit on this cash value. So whole of life line of credit, just give it a name, whatever will be easy for you to remember when you see it in the plan. You'll give it an interest rate, an estimated interest rate, and if they're going to be making active payments on it in the plan, you'll enter that payment amount. And then if they've already started taking money out of this line of credit, you'll enter the balance on the line of credit here. If they haven't taken any money on this line of credit, you'll just leave this amount as blank or zero. I'm going to click done to save, and then done again. And another thing I want to do is go down to my plan settings, and in liquidation order, I want to move line of credit to the very top of the list. So I want to move it up to the first thing that we're going to use. And I also want to make sure that its withdrawal limit is opened up. So let's just double check here. Withdrawal limit is set to as needed. So on whole of life line of credit, you're going to want to make sure the withdrawal limit is set to as needed so that the software knows that it can pull from this. And if we turn on our details, you'll just want to make sure that you're now seeing it being liquidated, and you'll see that in green here. So for the first 3 years, we're pulling from that line of credit And we're going to be using that to fulfill expenses so that we can give these accounts time to recover during that major loss event. And now what you're going to do is go to your Let's See screen, go to Chart View, and you can compare these two scenarios against each other so that you can show your clients the clear value of this strategy. So you can see here, we now have 3 extra years and some change of additional liquidity because we gave these accounts time to recover from that major loss event by pulling down from this line of credit from the whole of life policy. I hope that this was helpful. You can also compare and contrast your assets charts to show your clients how much longer their assets are able to last in the plan. But if you have any questions or you have a specific scenario that you're wanting to model, you can always reach out to me at support@planwithvoyant.com, or you can click the name of your client in the top right corner, request support, enter your question into the text box, and share client access. Thanks for listening.